What's going on, guys? This is Foresight Capital, and today I wanted to talk a little bit about the Airbnb IPO, how it traded today, and where I think it's going over the coming weeks and months. Airbnb IPO'd this morning at $68 per share and ultimately started trading at $146. Had a relatively big run up at the beginning, up to $165 per share, before ultimately trading all throughout the rest of the afternoon between $140 and $150 per share, and closed at about $145. So a relatively unvolatile afternoon after a bit of an initial spike. But one of the biggest questions that I've had through comments on other videos as well as emails is, why did Airbnb IPO at $68 and then immediately start trading at $146 per share? So I wanted to talk a little bit today about initial allocations, their overall market cap, and whether or not I think it's a buy at this level. I pulled up a Barron's article here that kind of highlights some of the specifics for us, and Airbnb ended up raising $3.5 billion in capital with this IPO. They offered 51,500,000 Class A shares at $68 a piece, and that gave them a market cap of about $47 billion. And it goes on to say that they're trading in the NASDAQ under ticker symbol ABNB, if you didn't know, and Morgan Stanley and Goldman Sachs were the lead underwriters for the deal. So to answer the question of why they started trading at $146 per share when the shares were offered at $68, sort of leads back to the underwriting, the institutional investors, and the high-profile investors at some of the big banking institutions buying up the initial allocation. Effectively, when Morgan Stanley and Goldman Sachs underwrite the deal, they study the company for months, and the company sends in prospectuses, and they eventually come up with a valuation for the company, which was determined to be $47 billion, and that's determined through revenues and projected revenue growth and projected income growth, profit margins, capitalization, and many other factors. And for doing this underwriting and helping the company get to the public market, Morgan Stanley and Goldman Sachs are given an initial allocation of shares, kind of as a kickback for doing the work on the IPO, and to also give them a reason or skin in the game, essentially, for the stock and IPO to be successful in the long term. Also, institutions are offered to buy these shares at the $68 per share to place them in mutual funds, hedge funds, and allocate them to some of their higher net worth investors, which are ultimately pretty large investors and celebrities. And so they get the opportunity to buy these shares at the $68. That means by the time they begin trading on the secondary market, these investors have already made their returns from the IPO. And as we can see, Airbnb was up 112% today. So by the time the Robinhood investors, the retail investors of the world get the opportunity to buy the stock, they've already missed out on these potential 100% returns, because if the IPO is a success, all of the shares would have been bought by institutional investors and high net worth clients of banking institutions, and there wouldn't have been any left over to send out to the public. That was the case with Airbnb, and so a lot of retail investors were not able to get their hands on these shares at 68, and instead were forced to buy them at 144, 160, 140, somewhere in that range where we traded today. And that erodes the potential for a lot of the big gains that you think about with an IPO stock. So you hear these high-flying IPO numbers like you'll hear tomorrow in the media. Airbnb was up 100%. And that's the case for the institutional investors and for the high net worth individuals and for the premier clients of banks who got the potential to buy these shares. But for the average retail investor that hopped on their Schwab account or TD Ameritrade this morning, you had to buy at $140 per share. And so when you think about it conceptually, Morgan Stanley and Goldman Sachs determined that this company was worth $47 billion. If they were worth more than that, which currently at current levels their market cap is over $100 billion, if they were worth $100 billion, they would have IPO'd a lot closer to that valuation, because that means they could have raised more capital for giving up the same level of ownership, or giving up way less ownership and raise the same level of capital. But Morgan Stanley and Goldman Sachs felt that they couldn't get a higher price, or that it may not be as successful if they would have charged $100 per share or $120 per share. So these very large financial institutions with analysts and all of the big powerful brains within the finance industry didn't think that they could sell the shares, at least not 51 million of them, for a higher price. And that's why it was priced the way it was. So that leads us back to, is Airbnb a buy? Well, maybe not at these levels, because we've already missed out on the potential for 100% returns. Could the stock double again in the next 3 months? Probably not, but maybe. But that's the level of returns that people are expecting when they buy these IPO stocks. And if you chase them up 100%, now you've got a lot of downside, because remember, these companies thought that they were worth $50 billion. They didn't think they were worth $100 billion. So that means that the stock is probably a whole lot more likely to reach that $50 billion market cap and fall 50% than it is to increase another 100% and have absolutely insane valuations. So you've got a much higher risk to reward ratio when you're buying at these levels after an IPO, and the hype is there. And I am bullish on Airbnb. In fact, I pulled up a couple of other articles here that seem to be very bullish for the stock. This CNBC article highlights that Airbnb had a net income this past quarter, even with revenues declining 19%. And if you think about it, 19% isn't a huge decline with the current state of the travel economy being diminished by 70% in some instances within the airline and hotel industry. So to see a decline in revenues of only 19% means that they're faring pretty well. And if you also think about Airbnb's business model, they're realistically going to probably come out of this way better than the hotels, because these hotels still have leases, they still have obligations to pay mortgages, they still have many, many employees that they're trying to keep on board, and they've just got millions and millions of dollars that they're hemorrhaging every single day. And while Airbnb is bleeding cash because they still have operating costs, they don't have the level of liabilities that some of these big hotel and other travel chains have, because they sort of outsource everything. Airbnb doesn't own properties, they just operate the platform on which people list their properties and charge a royalty for that. And so because of that, they don't have to worry about declining home prices, they don't have to worry about paying the mortgages, they don't have to worry about paying the leases. They just have the potential to cut back to levels that they can be profitable. And we can see that here, that they're still making a profit when other travel chains aren't. What that means to me is, if they're interested in this, a lot of these hotels are going to come up for sale because they just aren't sustainable currently with their liabilities of the companies like Marriott and like Hilton. And so I could see a lot of oceanfront properties or desirable locations coming on the market for very suppressed values. And I could see Airbnb coming in and scooping them up, because now they've got $3.5 billion in cash to expand their business with. And maybe they don't want that. They've sort of sustained themselves without having those level of liabilities. But if they get a good enough deal, I could see them coming in and opening up that sort of revenue stream as well, where they have operable hotel chains under Airbnb that they bought at suppressed valuations. We can see here that Airbnb is currently worth more than Marriott and Hilton combined, and that's because investors believe in this company, and they believe that, one, they've got a good model that's going to sustain a lot better than Marriott and Hilton because they don't have the liabilities, and now they've got a huge influx of cash to take advantage of any potential opportunities that come up while the whole travel industry is kind of shaky. So I think that overall Airbnb has potential to increase in value, but you have to wonder at these levels whether the company is worth it or not, because you've already missed out on 100%, 120%. That potential that you see in the headlines is already gone. People have already made this 120%. Now you have to worry about, could the stock fall 50% because the big investment banks didn't think it was worth that amount? And so now you've got a potential 50% plus loss, which you always have in any stock, but conceptually it makes sense that this is a big potential here. And you don't necessarily have the huge upside. Maybe Airbnb does double, but you have to factor that in when you're taking your risk on these trades. Don't go all in on Airbnb thinking just because it doubled in one day that it can double again over the next couple of months, because we're now at a $100+ billion valuation on a company that's only making a couple hundred million per quarter. And I say only, people are willing to pay very high multiples for profit in this current market because the returns are there. But when the market slows down, you have to worry about some of these stocks potentially not having the same level of upside and having a lot of major downside. So I'm going to continue following up on Airbnb, but I just kind of wanted to give my initial thoughts that I like Airbnb as a company. I love their business model, and I think that they are going to be very successful coming out of this whole global downturn that we're in. But you just have to watch it with your position sizes if you're going to trade the stock at current levels, because you've already missed out on that 100% gain that you're going to see touted in the news, and you've got a lot of downside as a result with probably what's limited upside. I could be absolutely wrong. Of course, do your own research on the company and buy what you feel is comfortable. I would hate to tell you to not play a stock and it double in the next month, but I personally don't see that happening. So I won't be buying at these levels. And realistically, I would start nibbling closer to $100 per share if we reach that. So that's kind of my thought process so far. Again, I'll cover some of the technicals as those become more relevant to the price action. So if you want to see that, make sure to subscribe and like this video so that it reaches more people. And I will continue to follow up on Airbnb. Thanks for stopping by, and catch you in the next one.